Out of today's big tech movers, Microsoft and Meta Platforms, both under pressure after results. Join us now is Brent Thill, Jefferies tech research analyst. Different companies, obviously, Brent. Same result this morning because of similar reasons. Do you see there's something rhyme in why this is happening to these two?
Yeah, I think the rhyme is really just AI combined with Capex and spend and what it's going to take for this next generation of applications. So Meta and Microsoft, both great quarters, but both guiding to a future of AI, which it costs a lot of money. And so Meta saying Capex up significantly without being specific next year. And again, you've had a 60+% move on the stock year to date. So I think it had absolutely perfect for it to continue this trajectory of 60+. For Microsoft, it's really about an air pocket in Q2 for Azure. So 34% growth in Azure in Q1. They expect it to decelerate to low 30s and then re-accelerate in the back half. And this is due to a third party not giving them enough of the workloads in Q2 that pushes into the back half of the year. So I think the common thread really is just high expectations for tech, a big move specifically for Meta, and then investors just requiring absolute precision given all the AI excitement. And as we've said, AI in software and internet is going to be a slow and unpredictable adoption at the beginning of this cycle. It'll become more predictable later in the cycle. But right now, again, these AI workloads, I think are really early. And again, as evidence of that, Microsoft is saying, AI is reaching $10 billion in revenue next quarter. If you put that in the bigger perspective at Microsoft, I mean, we're talking low single-digit % of their total revenue. So again, we're super early, and I think the expectations for investors just got overinflated.
I mean, they're called the Magnificent Seven for a reason, I guess, aren't they, Brent? And I guess one of the reasons is, like, for example, Meta. I can't even believe the low, and I remember when it was doing it, when it was hitting it, but it was 90. Wasn't it? And it wasn't that long ago. So I mean, a lot of this has to do with the performance of the stocks over the last couple of years. They've been incredible performers.
Yeah, I mean, they have. And again, when you think about the bounce when Zuck was in Congress and they were reviewing the business model and where the stock was at, and everyone had given up. Meta has done a phenomenal job. They've done a great job, post the Apple security transition. To get on the right page. They have over 3 billion users a day on the system. They're active. We think, again, one of the best potential opportunities for AI, given you need capital, users, and data to run AI. And Meta has all three ingredients, and we think they're in a really good spot. But yeah, I think the next chapter now is, hey, can they sustain mid to high teen growth? They've been sustaining 20. They got to 20% growth this quarter with a low 40% margin, really, really good financial performance, both top and bottom line. And then can the next leg of AI be as profitable and as exciting for revenue? So, harder comps. Again, everyone across tech, it's this Capex war, and who's gonna continue to accelerate, who's gonna slow their spend. I mean, Google, for example, right, slowed down a bit for the next quarter, and the expectations were so low, the stock jumped. So again, elevated expectations off of really good moves. And again, I don't think that this is some massive pit stop. I think these are kind of more speed bumps, in my opinion, based on what we see.
I mean, advertising is dependent on a strong economy, and we are, obviously, that's a lead story in the Wall Street Journal, 2.8% GDP. So if digital advertising already slowed from last quarter, not that much, but it did, isn't there a potential something looming if we eventually get a slowdown? I don't know for what reason, but nothing lasts forever. I mean, if there's already concerns about digital advertising sales growth, why couldn't it totally hit a wall someday?
Well, I think there's a Q1 hangover coming because you have all the political spend that's hitting.
That's
You've had to your point, you've had a really, really strong backdrop for advertising spend. You look at what happened with Reddit, Google, Meta, all these numbers have been really good fundamentally. And so I think many of the advertisers we speak with are saying, hey, Q1 could be kind of gnarly this year based on all the pent up excitement of what's been happening this fall with all the activities. And so that attracts advertisers. So I think that's probably more of the short-term one we're keeping a close eye on. I think most investors understand that would happen. It would drop post-election. So that's a bigger issue for Meta. For Microsoft, that's really not as big of an issue that we're keeping an eye on. That's going to be more dependent on corporate enterprise demand for their AI solutions. So that'll have a different impact on Microsoft.